Ladies and gentlemen, good day and welcome to the Yatharth Hospital Q1 FY'25 earnings conference call hosted by Elara Securities Private Limited. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements which are predictions, projections, or other estimates about future events. These estimates reflect management's current expectations about the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kashish Thakur from Elara Securities Private Limited. Thank you, and over to you, sir.
Thank you, Neha. Good morning, everyone. I, Kashish Thakur from Elara Capital, welcome you all to Q1 earnings conference call of Yatharth Hospital. From the management side, we have with us today Mr. Yatharth Tyagi, Whole-Time Director, Mr. Amit Kumar Singh, the Group CEO, Mr. Pankaj Prabhakar, the CFO, Mr. Nitin Gupta, President Finance and Chief Operating Officer, Mr. Neeraj Vinayak, Head Strategy and Investor Relations, and Mr. Sonu Goyal, Group Finance Controller. I now hand over the call to Mr. Yatharth for his opening comments and to take it forward. Over to you, Mr. Yatharth.
Good morning and a very warm welcome to Yatharth Hospitals and Trauma Care Services Limited earnings conference call for the quarter ended June 30th, 2024. I have with me Mr. Amit Kumar Singh, our Group CEO, Mr. Pankaj Prabhakar, our CFO, Mr. Nitin Gupta, our President Finance and Chief Operating Officer, Mr. Neeraj Vinayak, our Head Strategy and Investor Relations, and Mr. Sonu Goyal, Group Finance Controller. We have uploaded our presentation on the exchange and the company website, and I hope you all might have received and have had an opportunity to go through it. Well, it gives me immense happiness as we deliver yet another quarter of exceptional medical excellence and high-end super specialty treatments at Yatharth Hospitals. Today also marks a special milestone as we celebrate 1 year of our public journey. Over the past 1 year, we have reached new heights, consistently delivering outstanding outcomes for our patients, investors, and all stakeholders. Over this journey, we have observed a shift in our brand positioning with an increase in high-end procedures and super specialty treatments across our hospitals. Each of our facilities is now equipped with state-of-the-art infrastructure, including the latest in robotic technology such as Da Vinci X surgical robots and Stryker's Mako orthopedic robots and Cubis orthopedic robots. It is with great pleasure that I highlight some of the key clinical achievements by our hospitals this quarter. We have recently performed epilepsy surgery on an Iraqi patient where we removed part of the right temporal lobe of the brain. This quarter, we also performed EVAR on a Liberian patient. EVAR is endovascular aortic aneurysm repair without incision. This was done endovascularly in our cath lab. The mortality of such aneurysm is usually very high, but we were able to discharge the patient within 7 days of the operation. This quarter was also marked by removing the biggest arterial maxoma from left atrium. The size of maxoma was biggest and is yet to be reported in international journals. The growing Yatharth brand is now able to attract renowned doctors and stalwarts in their fields across NCR region. To name a few, this quarter recently, we welcomed Dr. Ajay Bhalla as Director of Department of Gastroenterology, a renowned name in Noida region. Similarly, Dr. Pawan Singh joined us recently as Director of Hemat Oncology and Bone Marrow Transplant, who is a very renowned oncologist who has performed more than 1,000 bone marrow transplants across his career in NCR. Similarly, Dr. Balkrishnan also recently joined us in a new hospital in Faridabad, who's bringing with him a reputation as one of the most esteemed surgeons in the Faridabad region. These doctors, these additions, along with certain new additions in our doctor team, are further enhancing our brand and advancing in our centers of excellence. We also continue to professionalize our management and bolster our finance team with addition of 3 key management personnel this quarter to strengthen our finance function and steadfast our expansion strategy. Our clear strategy focuses on expansion and expanding our footprints across North India, ensuring we continue to lead and innovate in the healthcare sector. We have also recently signed an NDA with a leading Big Six auditing firm whose team is now actively working with us to ensure streamlining of our finance operations and have already started performing a management audit in our premises. These measures underscore our commitment to robust governance and sustainable growth, reinforcing our dedication to creating a long-term value for our stakeholders. Now coming to Q1 FY'25 performance, I am glad to announce that Yatharth Hospitals have achieved industry-leading growth in revenue and profitability this quarter. We have delivered stellar results with our revenue rising by 37% year-on-year, while our profit after taxes growing by 60% year-on-year. A key highlight of this quarter is the seamless integration and commencement of operations at a new acquired Faridabad hospital, which began in May 2024. The hospital was established just 3 years ago with a modern infrastructure and held NABH accreditation and is empaneled with all major insurance providers and TPAs. Henceforth, within the first full month of its operation, the hospital achieved an occupancy of 13% in the month of June 2024 and an ARPOB of rupees 28,000. We are actively looking to enhance the hospital's capabilities by introducing state-of-the-art services and cutting-edge robotics to deliver superior healthcare solutions to the residents of Faridabad and its surrounding areas. The strategic foresight behind the acquisition highlights our commitment to integrating and optimizing assets, contributing meaningful to our financial performance. The quarter also earmarked a significant improvement in occupancy across all our network of hospitals. The occupancy levels of our Noida Extension and Jhansi Orchha Hospital improved significantly to 61% and 45% respectively, compared to 37% and 17% in Q1 last year. Despite addition of 200 beds at Faridabad, our overall occupancy levels of the group reached 61% compared to 51% in Q1 last year. As we advance our operations and expand our service offerings, we expect to see continuous increase in the occupancy at all our facilities. As we see optimization of our established hospitals in Greater Noida and Noida Extension hospitals, we are all set to start construction at the land parcel acquired adjacent to these hospitals to further expand our bed capacity in this region in the coming 2 to 3 years. Our state-of-the-art oncology center has also begun well, and our organ transplant program and robotics at our hospitals are now driving a shift in our specialty mix and increasing our ARPOB, as well as overall occupancy levels. Our strategic shift towards super specialty treatments has now yielded a shift of revenue contribution from internal medicine to other specialties, with oncology now contributing 10% to group's revenues and about 17% for Noida Extension Hospital alone. Consequently, our ARPOB has been on an improving trajectory quarter over quarter, crossing the 30,000 mark in Q1. Notably, our Noida Extension Hospital has led the way with its super specialty contribution of more than 70%, leading to highest ARPOB in group of rupees 37,325 this quarter. Finally, coming to debtors, I am pleased to inform you that out of rupees 227 crores outstanding as of March 2024, we are able to recover 80 crores. And given the growing scale of operations and the net outstanding positions, we are even able to see an improvement in the debtor days, by debtor days coming down to roughly around 5 days. This trend is on expected lines, and reducing debtor days of around 5 days in a quarter is a good improvement, and we feel confident on continuing this trend for the coming year, and we are expecting that by the end of this year, our debtor days will be close to around 100 days if we continue on this trend. With this, I would now like to hand over the call to Mr. Pankaj Prabhakar, CFO, for the financial update for the quarter.
Good morning, everyone. I am delighted to say that Yatharth Hospital has once again achieved industry-leading growth in both revenue and profitability for the quarter ending June 30, 2024. During the quarter, Yatharth Hospital achieved a revenue of Rs 2,118 million, reflecting a substantial YOY growth of 37%, driven by an improvement across occupancy as well as ARPO. Notably, our Noida Extension Hospital registered a stellar 81% YOY increase in revenue, contributing 38% to our top line now. Our inpatient volume were up by 28% to 15,235 this quarter, while our inpatient revenue increased by healthy 38% YOY during the quarter. Our growth was accelerated by an improvement in our ARPO by around 9%, standing at rupees 30,551 in quarter one. In addition to the improvement in our case mix, our focused effort towards optimizing our payer mix as well as improve price negotiation with the private insurance companies with enhancement of our brand recall are all adding to this growth. With the operating leverage, our EBITDA for the quarter improved by 30% YOY to rupees 537 million. However, our EBITDA margin this quarter were at 25.3% compared to 26-27% last year. The minor slip in EBITDA margin for this quarter was on account of operational losses at our Faridabad unit, which become operational in mid-May. Adjusting for Faridabad Hospital, our EBITDA margin would have been in the range of around 27.3% this quarter. As we move in subsequent quarter, we are confident that the pace of operational losses at Faridabad will come down, and we expect marginal loss at this unit by the end of this fiscal, and hopeful to achieve a breakdown within 18 months from operationalization. Nevertheless, our occupancy and ARPO level at our Faridabad unit encourages us on the potential contribution this facility can make in the overall group's number. Our finance costs, though come down YOY, have increased quarter over quarter. Due finance costs linked to around 800 million debt raised to facilitate the transfer of pending debt liabilities associated with Faridabad Hospital acquisition in our books. This deliberate move, however, allow us to enhance cash efficiency for allocation towards other growth initiatives that may come in future. In line with operating profit, our profit before tax grew up by 46% YOY at rupees 430 million, despite an increase in depreciation expense this quarter. With Faridabad acquisition, while our profit after tax were up by 60% YOY at rupees 304 million. Subsequently, our tax margin has come down this quarter due to Faridabad losses and the conservative tax provisioning taken during the initial quarter of the year. However, our group average tax rate should settle at around 25% for this fiscal, and hence we expect this to normalize in the coming quarters. With a more strengthened finance function and strategic initiatives such as close monitoring of our receivable, reconsideration of doctor targets to collections compared to revenue earlier, we have seen a meaningful recovery in our receivables this quarter. We are confident that we come back next quarter with our mid-year numbers. We would be in a much better position with respect to our receivables and cash flows. Overall, our balance sheet continues to be strong with a cash position of rupees 1,826 million. We remain dedicated to deploying these funds strategically to drive further growth and value creation. Thank you. With this, I would like to hand over to the moderator for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Poojan Shah from Molecule Ventures. Please go ahead.
Hi, sir. Am I audible?
Yes, sir.
Yes. Okay. Sir, first question would be on the, as we have mentioned in the PPT, that we are targeting around 2,800 to 3,000 beds in FY'28. So almost we are doubling our bed capacity. So just can you just mention, as you have already mentioned in the Concall, that you have been expanding via land parcel which is available near to your hospital. So could you just help me with how, which is the facility, where the facility has been extended and what number of beds could be accommodated over there, and rest how we will be targeting the expansion in terms of internal accruals or debt. Can you just give me a broad breakup on that part?
Yeah. So, as you mentioned that there are 2 adjacent land parcels available in our Noida Extension in Great Noida Hospital. The Noida Extension land parcel, which is adjacent to the hospital, which is actually behind the hospital, that's where we are adding 250 beds. And Greater Noida land parcel, which is just on the right side of the hospital building, is where we are adding 200 beds. Both these 200 plus 250 beds will be available for us to use in 2.5 years, roughly. And that's how we'll be adding these land parcels. Along with that, as you mentioned that, there is much more bed capacity that we're looking to target in the next 3 years. The rest of the additions to the bed capacity will happen by, means of mergers, acquisitions. And we are already in the pipeline for certain acquisitions. If you look at our journey over the last 2 fiscals, we have acquired 2 hospitals. One was in Jhansi, Orchha, and one was in Faridabad. And for this fiscal, we already have plans. These expansion plans are primarily located in the market of North India. So, Delhi NCR, Uttar Pradesh, Punjab, Bihar. And these are the areas that we will want to be at least for the next capacity expansion of around 3,000 beds. As far as the funding of these hospitals are concerned, as our CFO was mentioning, there's cash available with us today on the books also. Plus, there's also, scope for certain debt if required at all, we can still take. So third is as from the internal accruals, because our finance cost has significantly reduced after the IPO. So internal accruals position will be strong in the coming years. So by the means of these 3 channels is where we will be looking to fund our expansion of the bed capacity.
Okay, but sir, continuing with the same portion. So let's suppose this facility 450 beds will come in 2.5 years, which is at greenfield, and ultimately we will be acquiring. So even though if we look at the cash flow generation versus what we can expand it towards the bed capacity, it seems to be more aggressive on that part. So are we confident enough to achieve 3,000 bed capacity in FY'28, because the target seems to be a bit stretched?
So, we have already started on that journey when we were 1,400 beds. Post-IPO, we acquired Faridabad Hospital at 200 beds. And moreover, the acquisitions I was mentioning also includes O&M model, operation and management model, where the outflow in terms of the asset heavy won't be there. So, that will allow us, we are in talks right now for a 400-bed hospital that is available on O&M, and the capital outflow there would be not much. So I think, yes, we are quite confident, and it's that we have seen certain assets which are quality assets that we feel will add value to our group, and that's why we feel that this total bed capacity is possible in the coming year.
Okay. And my second question would be on the Faridabad. So if you look at the payer mix, how the payer mix have been shifted in the earlier when we have acquired the hospital, and currently now how we have been looking to change in the mix of payers. So how we have been looking at the Faridabad hospital, and eventually as we have also started robotic surgery and specialty surgery over there, what occupancy, obviously it would take 18 months to break even, and then we'll get operating leverage benefits. But how we are looking in this hospital operating ARPOB, occupancy, and in terms of payer mix?
Yes, see, Faridabad has shown very promising initial numbers. In the Q1, it has just been operational for 1.5 months. But, post that also, what we're seeing the latest numbers there, it has shown very good potential. Again, reason being because that is a huge healthcare market. There are a lot of drainage in the nearby villages, and there are a lot of societies that are upcoming around in and around where this hospital is located. So, the initial numbers that you've seen in this quarter, you've already, with the opening of the hospital, you're seeing an ARPOB of rupees 28,000 without, even the super specialty services yet being matured. So we are quite confident, and good, change that we have seen here and in our brand positioning also is from the day one itself, we are going ahead with star doctors in Faridabad. As I mentioned in my commentary earlier, there's a leading surgeon in the region who has joined us, and much more, other specialties, including the critical care head, neurosurgery, physicians. We have gone with starlords of those areas, which are helping us drive their own patient clientage that is coming to us. And so far as we see, around 85% of that hospital revenue is purely from private insurance and self-payers. So there's a very good case mix with a very good ARPOB that we have seen in the initial numbers. And going forward, we are, sure because of these, leading clinicians who would be driving their own clientage, plus the hospital brand slowly growing with the, coming quarters ahead. This will be showing a very good case mix as well as high ARPOB for a group.
Okay, got it. And sir, in our facility, we have shown an occupancy of roughly around, I think, 86% in the Noida, but we've seen that average length of stay has been increased by a bit of 5.66. So how we have been planning to reduce and improve the ARPOB over there?
See, I think Noida, being our old hospital, started operations in 2013. We feel that hospital with the limited infrastructure and the small scale that is running on, and there's no, potential to increase that hospital because there's no adjacent land parcel available there. We feel that the hospital is doing fine. We don't want to trigger and change much in terms of ARPOB or the case mix in that hospital. It is our greater Noida as well as the Noida Extension hospitals that have started in 2018 and 2019, which are big infrastructures, bigger land parcels, and even expansion scope available there. This is where we are expecting a huge growth in terms of our, ARPOB and in terms of occupancy. And if you see on that front, Noida Extension Hospital in just last one fiscal has grown over 80% yearly and contributed to now around 38% in terms of our overall growth. So these are the hospitals that we are fueling the increase in our ARPOB as well as the case mix.
Got it, sir. And one question, like just your clarification on finance side, I just missed out the CFO comments. So what would be the comment on the finance cost? It has been, like there was some saying that it has been increased, and after that I missed out the part.
So we have availed approx 80 crores in Faridabad acquisition. So it would be on the around of 8.5% per year. So that would be around 6 to 7 crores on average in a year that would be loaded during the financial year.
Okay. Got it. Thanks for answering all the questions. I will get back in the queue.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Runit Kapoor from Elara Capital. Please go ahead.
I have 2 questions. So can you just state what's your current international patient revenue and what is your aspiration regarding that? And also, can you give your hospital-wise breakup of the inpatient volumes? Because as on last quarter, you're not disclosing that.
So as far as international, yes, the number is still, in the single digit, right? But I think we are on a very, very good track. And let me tell you, it's like this quarter probably it's the highest number of the revenue which we have achieved so far from the international patients. And I think we have a good pipeline for the future. So probably the coming quarters, you will see much better, numbers as far as international is concerned. What is your next question? What was your next question?
Regarding the inpatient volumes, hello, can you hear me?
Yes. So our IPD and OPD both numbers have increased significantly. I think that is already there on a presentation. I think IPD has grown from.
No, I'm asking about the hospital inpatient, like disclose as on the hospital.
So during the quarter, total IPD numbers is 15,235. That includes for Faridabad, Greater Noida, all hospitals. Total number is this.
No, I'm asking you the individual numbers. Like, is it possible to share that?
We are just sharing to you. So for Jhansi, we have a total number of 2,785. For Greater Noida, our IPD number is 4,555. For Noida, it is 2,967. For extension, Noida extension, 4,752. And for Faridabad, the total number is 176. So only in 40 days operational period, Faridabad has kicked off 176 total number.
Okay, thank you.
Thank you. The next question is from the line of Nandini Maheshwari from Carnelian Asset Management. Please go ahead.
Hi, can you hear me?
Yes.
Hi. Okay, so I have 2 questions. First is, what is the ratio of government business? Is it coming down? And the second question is, how is the oncology business shaping up?
Yeah, so oncology business is shaping up quite well. Oncology is now contributing close to 10% in our overall hospital's revenue. And in Noida Extension alone, that is where we have the complete oncology setup. This is where, it is contributing to 17%. And we feel that 70% contribution in oncology is a very good number. We are even hopeful that this contribution will go up. As I was mentioning, some leading clinicians in oncology have now recently joined us, including bone marrow transplant, which comes under hemat oncology. We feel that even in Noida Extension, this number of oncology alone can cross 22% as far as the contribution is concerned. Coming to your first question about the payer mix. So government business, yes, it is on the lines of going down as automatically, the self-payer and private insurance and international business increases. This government business will go down, and we feel that we have reached maximum capping in terms of the overall contribution of government business, which was 40% last year, and we feel that the business will come down as the other segments increase from here in terms of the overall contribution is concerned.
So could you give me a number? How much was it by the end of this quarter?
It is close to 37%.
Okay. And could you also just repeat what you said about the auditor's appointment? I missed that part.
Yes. So, we have signed an NDA with the top 6 audit firm of the world. who have been working in our premises throughout this result declaration. And going forward also, we are quite confident that certain processes are required for any leading auditor firm, and certain timelines are there for them to come on board. So in the coming quarters, we are hopeful that we will be meeting those timelines, and will be announcing their appointment in the coming ahead time.
All right. Thank you.
Thank you. The next question is from the line of Aman Vishwakarma from Phillip Capital. Please go ahead.
Yeah, thank you for the opportunity. I had a question on your Faridabad acquisition, right? So do we have a number in case of what is the occupancy we are seeing by the end of this year?
Yeah.
So presently, we are having the occupancy nearly around 30%, and we are going with a good pace.
So as far as Faridabad is concerned, I think at the end of the year is where we are expecting an occupancy of close to 30%. And this will be, if we feel that if that's the number achievable, then it will be quite good. Right now, the occupancy there is 10% because it has just started. So we feel 30% at the end of this year would be a good occupancy. And see, because the good part is that it already has private insurance which are already empaneled from day one. So otherwise, we would have taken a lot of time to get those empanelments. So we feel close to 30% would be a good number at the end of this year.
Okay. And secondly, on your Jhansi Orcha hospital, the ARPOBs are on the lower end. So is it due to the seasonality or what exactly is happening there?
So if you look at it at Jhansi, and if you follow the last 2, 3, 4 quarters, if you see, and then we started, our ARPOB was better because the high concentration of the, cash and insurance patients, mainly the cash. As we have stated earlier, that more and more empanelments happening from the, government and other, the FPSUs and others. So their ARPOBs are definitely elevated. So I think we believe, but you see that the occupancy has increased significantly, and that is what the unexpected line. So initially, since we had no the empanelments, so the cash percentage has much more, and that is what ARPOB was better. But now they dragged down just because of the other, the government and PFU business. So that is as per the expected line.
Okay. And just lastly, on your foreign patient business, I'm sorry if this has been answered earlier, but would you be able to give us a share of the revenue from foreign patients?
Not that significant number. So I would love to give you numbers when we receive a significant mark. But yes, this is in a single digit as of now. But as I said, it's more important is about the processes. Believe me, we have a significant pipelines, and the coming quarters will be fantastic for as far as international business concerned for the Yatharth group. As the new international airports going to come, it's going to operationalize by, I think, end of this financial year, this year, I believe. So we have that plan, and the processes are placed accordingly.
And just lastly, a follow-up on that. So, I mean, what are we doing in terms of marketing ourselves as, a branded player in the foreign business?
So, see, if you look at it, there are, the multidisciplinary approach which we one should have, and it's one, you have to focus on the, patients who are already, floating in this region. That's one part of it. Second, you set up your own spokes over those, countries where the more patients coming in, and Delhi NCR particularly. So, and then third is about the, the another channel is about the overseas insurance companies. So we are working on all those 3-4 channels, and I think we'll be doing good in the coming future.
Okay. Thank you, sir. That answers my question.
Thank you. The next question is from the line of Prashant Nair from Ambit Capital. Please go ahead.
Yeah, hi, good morning, everyone. Just a couple of questions. Firstly, can you provide an update on by when do you expect the brownfield addition at Noida Extension and Greater Noida to be available in terms of the beds to be commissioned?
Good morning, Prashant. I think the expansion capacity at both Noida Extension and Greater Noida would be available from Greater Noida Hospital would be available from 2 years from now. So probably 2 years down in August is when we expect it. As far as Noida Extension is concerned, it would be 2.5 years from now is when it's expected.
So around mid 2026 and early 2027. That's the general timeline.
Yes.
Okay. And can you also, is the capital cost or the CapEx for these projects, can you just give us an update on what you intend to invest?
So I think this will be done through internal accruals. We expect the CapEx per bed, because these are sort of a brownfield expansion. The CapEx per bed in these two expansion would be close to 65,000 rupees, 65 lakhs. So I think that's where we feel that from internal accruals is something which we can easily do for these two expansions.
Okay. And this is just last question from my side. In the past, you have talked about one inorganic, deal every year. So is that still an aspiration? And if yes, then which parts of the Delhi NCR region would you largely be targeting?
It is definitely a strategy, and this is something which we've already proven in last 2 years. So as I said, a couple of years back, Jhansi Osha was there. Last year, Faridabad was there. And this year, we are actively in high, stages of advancement stages of talks with, in fact, 2 of the hospitals. So this is primarily, as I mentioned earlier, in Delhi NCR and Uttar Pradesh is where we are also seeing. Also, Rajasthan is some territory that we have identified a hospital that is available there for an O&M model. So this is why we feel across these 3 regions in the next, coming years, including this year, one acquisition should be happening each year.
Okay, thank you. That's it from me.
Thank you. The next question is from the line of Priyank Parekh from Abacus Asset Management LLP. Please go ahead.
Yeah, hi sir. Am I audible?
Yes, very good. Sure.
Yeah.
Yeah, go ahead.
Yeah. So you mentioned about your receivables going, you recovered some 80 CR. So what is your receivable amount as of now?
Receivable amount, even though with the increased scale of business in the Q1, it's closer similarly to the amount that it was at the closing of last fiscal. So even though the business has increased, but we were able to bring debtors down of close to 5 days. So it is somewhat similar to what it was last year. But, as you can see, our revenues have increased even with that as the status.
No, so is it fair to take the number same as last, as of March 24?
It's closer to that.
Yeah, okay. Got it. So for you mentioned that adjusting the Faridabad dose, you would be having higher margin. So what is the percentage loss in Faridabad as of now?
Say that question again.
Faridabad. So I am mentioning what is the EBITDA margin of Faridabad as of now?
This is 2% dilution in the current EBITDA. If we remove the Faridabad EBITDA loss, so there is a dilution of 2% EBITDA in the overall consolidated numbers.
Okay, that way I'll work it. Okay. And so Jhansi ARPOB has been quite volatile. You mentioned the change in the payer mix as the reason. But what is the sustainable ARPOB you are seeing for that hospital?
You see, as I said earlier, that more and more payer mix is the government and the PSUs, because these are the majority business in that region, right? So we have to have those business. And that is what, so reasonably, I think anything between landing from, currently I think it's 10,000 rupees. So, but the change of we are expecting a change of the, clinical mix, because more and more super specialties will be playing the role there. So I think it will be closer to anything between 15 to 18 kind of, that will be ideal for expectation in the Jhansi.
Yeah, along with the payer mix, also the rates you have to see are quite less compared to our NCR hospitals. So even the lower pricing there plays a role in the lower ARPOB, along with the the difference in the pay.
Jhansi is more over the the volume business, and that is what you see currently. The occupancy is 45%. At present, I think the hospital is fully packed. But for this, that's last couple of days I can tell you. So it's going with an expected line, and Of course, more and more like a NABH is there, then NABL and others, licensing going to be there. So we command it, if you like NABH hospital, you command a 10% additional rate. So I think, and then having more and more penetration of the insurance business. So these are the lines which we're expecting close to 15 to 18,000 rupees ARPOB. I think will be a good.
Okay, so with that ARPOB and it being more of volume driven, we must be having quite a lower EBITDA there. So what is the broad range of EBITDA we are running there?
I think we are getting a bit of 10%. Currently, we are having a bit of 10%, 10.2% the current EBITDA.
Okay, and at a peak maturity like 70%, what should be the EBITDA?
It will definitely go 25 to 26%. It will another same trajectory as the consolidated numbers are standing.
Okay, despite having the lower ARPOBs.
Basically, as we just rightly said, the number of patients has been increased. So the July and August more are trending more than 325 patients in the overall hospital. Although our pricing is low, NABH certification under process. So this all will jack up the overall ARPOB.
And also see the reason why EBITDA margins would be similar within the occupancy, because even the expenses in Jhansi are not that much. So let's say the manpower cost is also lesser there compared to NCR. The doctor cost is a bit lesser there compared to NCR. This is what will help us achieve the EBITDA margins that Sonu was talking about.
Okay, sir. And sir, last question on my side.
To interrupt you, sir, I request you to come back.
One last question, please. One last question, please, sir. Yeah. So, what is the development on our 71 CR seized by IT department? So, we were seeing that we are seeing quite a good sign in last quarter, but what is the development there?
No amount as of today is seized at all. Every amount has been released already. So that's the status with that.
Okay, so now that case is gone, right?
It takes time, but now there is no amount that is seized, and the report has been sent to the center appraisal report, and all the amount has been released.
Okay. Thank you.
Thank you. The next question is from the line of Pratik Poddar from Bandhan Mutual Fund. Please go ahead.
Yes, so just one question. Could you just help me understand what was the drag on your P&L because of Faridabad integration this quarter?
The drag in P&L is around 2% in the EBITDA level.
Of sales.
2% of sales. Yeah. So around 3.6 CR is the EBITDA loss in Faridabad. That dilutes the overall 1.8% of EBITDA.
Okay. Thanks. And secondly, sir, can you help me understand the entire payer mix? You called out government is 37.
Yes, and the remaining is the cash that is the self-payer and private insurance are equally divided among the rest. Yes.
Okay, got it.
We are contributing and we are including international sales in self-payer and cash only.
Understood. Sure. Thank you.
Thank you. The next question is from the line of Kashish Thakur from Elara Securities Private Limited. Please go ahead.
Hi, thank you for the opportunity. I have two questions. My first question is on Faridabad facility. Just wanted to know by when can we expect this facility to break even?
So I think within 18 months is the fair assumption for it to be break even.
Understood. And the second question is on Jhansi facility. Just wanted to know how is the competitive scenario in the area? Like how many unorganized players are present in Jhansi, and what kind of major patients, whether it is more kind of insurance patients or cash patients do we witness in this region?
So there are a lot of unorganized players, but as far as the super specialty hospital of this scale is concerned, I wouldn't say there is a hospital even up till 200 kilometer radius from this hospital. Even up till Gwalior, ours would be the largest hospital. As far as the payer mix of that region is concerned, no, there are not many private insurance patients there. Private insurance penetration is still, not there much, but self-payer as well as a lot of Ayushman card scheme holders are there. That is the government business. As well, that area is a big hub for both army as well as railway. So there are a lot of patients holding these cards which contribute to the government business there.
Understood. Thank you. Thank you. I'll join back with you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to one per participant. I repeat, please limit your questions to one per participant. Thank you. The next question is from the line of Prerna Amanya from PNA Ventures. Please go ahead.
Yeah, hello. Thank you. And congratulations on a good set of numbers, sir. I have two questions. I think you would have already covered it. First one is, what is the debtor days after Q1 FY'25 and the last Q1?
Debtor days now are 5 days lesser than what it was for the full fiscal year last year. And we are quite confident that with the same trend, reducing 5 debtor days in a quarter is a good effort made by the new finance team that has joined. We feel that if we continue this similar trend for the whole fiscal this year, we will be somewhere close to 100 a day.
100 a day. Okay. So the other question was regarding this IT raid that had happened. I think it happened almost a year now. And you were talking about it to the previous participant that the money that was frozen has been released. So can we use this right now, this money for our operations, or is it still frozen? And there is also this other additional 80 lakhs, right, or 8 million that is there, that has also been seized during operational cash. What about that?
So it has been released, but for utilization in the operations, there's still time in that. But these are the normal protocols that happens after every, investigation. And these things, they do take time. But there's no seizement of any amount within our bank. And, it has not impacted any of the business and the operation or the financial working of the company.
But sir, what about that 8 million that was there in the footnotes of the income statement? Like, when did this happen? Because if it had happened at the same time, why was it not informed to the exchange or even last quarter when we were discussing about it?
So it was mentioned there in the notes, and as far as that amount is also concerned, it has been reduced now. And see, these investigations, they are informed to us also at a certain time. It's not that a similar amount is there from the beginning. Each time, there's a different amount that gets there. So I think as far as now is concerned, it's that amount is significantly reduced and it has not been seized now.
Okay, sir. Fine. Thank you so much.
Thank you. The next question is from the line of Nirali Shah from Ashika Stock Broking. Please go ahead.
Yeah, thank you for the opportunity. Most of my questions have already been answered, but a few quick ones. Just on the margin front, it seems to be a bit on the lower side, mainly due to the operational losses at Faridabad unit, as Pankaj sir mentioned in the opening remarks. Is there anything you would like to mention regarding how we should look at it from a 2 to 3 years time span on the margin numbers?
Faridabad margins would be, I think, in 3 years line, would be somewhere close to, somewhere above 20% in terms of the margins are concerned. And, the good part about this location and this unit would be we are expecting a good ARPOB. Yes, 28,000 is just the initial ARPOB, but we feel even the ARPOB here will be somewhere closer to what our Greater Noida and the Noida Extension are doing. We have already started robotic surgeries there. We are already even doing surgical oncology. In the last month itself, we did more than 100 operations in this hospital. So I think we're quite happy with the progress, and the margins should be above 20% in the coming years.
And on the whole of the business? Not just Faridabad, but the whole consolidated level.
Overall business, I think margins will be sustainable. I think similar to what we are having in the overall margins are concerned. Because even though there would be certain drag until few years from the new acquisitions, but our existing hospitals, that is the Noida Extension, the Greater Noida, will continue to rise. So would be somewhere sustainable, 0.5% up and down, but quite sustainable.
Can we take as 25% to be a sustainable margin? EBITDA margin?
Very close to that.
Okay, understood. And just one more. While our Faridabad hospital has shown a stellar performance just in the 1.5 month view, Jhansi Orchha unit, so even the previous participant mentioned about the drag of ARPOB. Is there any plan that we have to mitigate or maybe to do away with the government and the PSU patients that we have, or trying to increase it in the private space?
See, if you look at it as per totality, if you talk about the group, see, earlier we had that inventory left. So that is what, we were taking this government business something. But now, as you see our numbers, I think the occupancy is more than 60% in a group level. So we have reached at a, critical volume where, now it's, we can do the fine tuning of our mix. So that is what this business, government business is already, as Yatharth mentioned in before. I think we are already clipping down the government business. So in the future, you see the insurance and cash business will have a significant, numbers than this. So it will automatically reduce. And as you know that this business are not a compulsory for us to take. I mean, these are all pick and choose.
Right. So aspiration of having an ARPOB of say 15,000, 18,000, would this be achievable in our time?
Yes. It will be achievable in the coming years in Jhansi Orchha.
Lastly, just a quick bookkeeping question. So this quarter depreciation was around 114 million. Should this be considered as a new base going forward and an incremental as we acquire new hospitals?
Can you repeat the question, please?
Sorry?
Can you repeat the question, please?
Quarterly depreciation was 114 million. And just wanted to know that should this be considered as the new base going forward and as keeps on increasing?
Yeah. Basically, if you see, so there is an addition of one facility during this quarter, around 14th of May. So because of that, there is a further addition in CapEx. Although we are moving towards niche specialties, that too by adding the robotics in all other hospitals. The overall CapEx increase in this quarter is around 60 crore. Okay. That directly correlated with the medical equipment. Major part covers in the medical equipment. So that's why now is a trend, and we keep on seeing this number as a depreciation. And also, the depreciation and the new medical equipment did not just happen in the new unit. Even our existing hospitals, there was a lot of capex spend that was done. Along with the vortex and other equipment as far as neurosurgery and certain cardiac surgeries are concerned. So yes, I think that was depreciation was there.
Helpful. Thank you.
Thank you. The next question is from the line of Sanjit Chawla from Subcom Ventures. Please go ahead.
My question has already been answered. Thank you.
Thank you. The next question is from the line of Siddharth from Caprice Investments. Please go ahead.
So, hi sir, am I audible?
Yes.
Yes, sir.
Hello. So I've got a couple of questions, sir. So could you tell me more about the case mix at Jhansi Hospital, because I see that the ARPOB is quite low there. So I want to understand the case mix over there. Yeah.
So in Jhansi Hospital, the government share is more than the group average, and yes, that is why the ARPOB is low. But as I mentioned, that also the pricing there is low. The case mix is different there. So these are the three factors contributing to lower ARPOB there. But in the coming years, as we mentioned in the call earlier, we expect increase in the ARPOB due to the change in the case mix and increase in the super specialty treatments there. So we are also planning a medical and surgical oncology to start in Jhansi. We are also planning CTVS department, that is the cardiac surgery, to start in Jhansi. All these three are the key factors which will drive the ARPOB there in the coming years.
So, got it. And my second question is, sir, at this run rate, we should be comfortably crossing 1,000 crore this year in revenue, right? So, is it safe to assume?
Close to that.
Oh, okay. So, and so adjusting for the EBITDA loss at Faridabad Hospital, our EBITDA margin should, given the fact that, our ARPOB is, constantly increasing, so we should have posted, a better EBITDA margins, right?
Yes. So if we remove the EBITDA loss in Faridabad, our EBITDA margins would have
for all the existing facilities, okay, except Faridabad, there is an improvement or there is a status quo we will maintain. Okay. So there will not be less than 26 or 26.5% EBITDA percentage at the overall level.
So thank you and congratulations for the great set of numbers. Yeah.
Thank you. The next question is from the line of Urmi Khania from Robo Capital. Please go ahead.
Sir, so you mentioned for Greater Noida and Noida extension 2 to 2.5 years for the capacity addition. So do you see to add 100 beds operational in the first year and the rest in the second year? And how would be the capacity utilization of these additional beds in the first year, and how do you expect them to ramp up?
So in 2 years, Greater Noida will be at the same time ready with 200 beds. And within 2.5 years, Noida extension will be ready with 250 beds at the same time. So this will happen from the go, all capacity would be added simultaneously. When we add these capacities, we feel that it would take on these specific beds that have been added, because it's already a running hospital, we are quite confident that within 2 years post that, both these capacity utilization would be above 50% on these beds.
Okay. And another question is, how do you see the effective tax for full year FY'25 and FY'26?
So we are expecting 26%, 25.168% at full year taxes.
Right now, it is coming around 30% because of the losses in Faridabad. If we remove that losses of Faridabad, it's actually coming 25.68%. So effective tax rate, more or less, it's trending between 25 to 27%.
Okay. And for the Noida hospital ARPOB, do you see any growth there, or expected to be flat or in the similar range it's currently?
I think that Noida will have reached the peak. So yes, whatever the little growth is going to happen only because of the clinical mix. So even if you see it, either whatever the single digit growth, just because of the shifting the clinical mix. So I think it is very much in line.
Okay. That's it from my side. Thank you.
And one more thing is about the what the natural course of changing your year on year your SOCs. So that is what schedule of charges when you change, and then there are some negotiation with the insurance company or something. So those will play a role with increase the ARPOB.
Okay.
Thank you. The last question is from the line of Poojan Shah from Molecule Ventures. Please go ahead.
Hi, sir. On the broader side, I just wanted to ask, there was a news been running that there is a capping going on, and there is a discussion on the capping on the price. So is there any active outcome or
Yeah, so I think some quarters back there was a PIL in the court about that healthcare prices should be reserved for all the hospitals and pricing should be similar and regulated. I think since then even the center has told that it would be difficult to do certain capping as well as standardization of the rate. So that's the progress on that.
But still that matter is prejudice, but whatever all private hospitals, the body has already made their representation. So that nothing has come out, and then we are very hopeful that nothing should come out on those lines.
Okay, got it.
I mean, we don't want to comment more because matter is already in a court.
Okay, no issue. Thank you so much.
Thank you. Ladies and gentlemen, we'll take this as the last question. I now hand the conference over to the management for closing comments.
I thank you, Elara Securities, for organizing this phone call, And thank you for all the participants who have participated. I hope we were able to answer all your queries, and thank you for tracking. Thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.